What is good, guys? Welcome back to the channel, and today we will talk about a topic which you guys have been requesting quite a lot in the last few weeks, and that is how to determine a proper lower time frame change in order flow. So I would say let's get straight into the topic. And when do we apply a lower time frame change in order flow? It is pretty much our entry confirmation once we have determined the bias, the narrative, and then the last part is we want to confirm that on the lower time frames, applying a lower time frame change in order flow. So lower time frame change in order flow, right? That is the abbreviation which I came up with. Why? Because I also want to be special and have some abbreviation which I came up with. Anyways, before we are able to determine what is a change in order flow, we have to be aware of what is even the definition of order flow. And for that, let me give you quickly the definition of how I determine the current state of order flow. If we have bullish order flow, we want to see price doing three things. We first of all want to see price to form bullish PD arrays. So bullish PD arrays is the first thing which defines bullish order flow. The second thing which you want to look out for is price to disrespect bearish PD arrays. So price should be able to inverse bearish PD arrays and then use them to expand higher once they are inversed. Then the third thing, which is we then want to see price to respect bullish PD arrays, right? So if price is retracing into those inversion or bullish PD arrays, then we want to see price to obviously also respect those PD arrays. And that is the definition of bullish order flow. And for bearish order flow, it is obviously the exact opposite, meaning first of all, we want to see price to form bearish PD arrays, then disrespect bullish ones, turn them also into inversion PD arrays, and then use them to distribute lower. And the third thing, price should now respect those bearish PD arrays, right? Now that is the definition of bullish and bearish order flow. And we also have a third one, which is neutral order flow. But since we don't want to trade in neutral order flow, that is less significant. But neutral order flow is pretty much if we are in a ranging profile and price is respecting neither the bullish nor the bearish PD arrays, especially around mid-range, right? So respecting neither the bullish or bearish PD arrays. And that is now the foundation, what you have to understand if we want to determine what current state of order flow we are trading inside. Now, once price hitting our key level, we have swept the external liquidity, in this case, a bullish scenario, meaning we have swept the external sell side. We potentially have a key level down below, or maybe the low itself is the key level. And now we want to look out for a change in order flow. And that is where I see most people doing typically two mistakes. And the first one is they mistake an internal stop run. We have this internal high here with a change in order flow. So they see price running the external, and then we have price leaving behind in that last recent leg, which took out the external, for example, some lower time frame fair value gap. They see price trading above, and then they say, okay, we have an M5 inversion fair value gap, so that means we now have the confirmation, price is bullish, and they enter long positions off of this M5 inversion fair value gap, putting their stops at the low, and then they aim for the higher time frame target. And then the trade also looks good. We trade higher, we run above this internal high, and then what happens? Price comes back straight away and stops them out. That is one of the most common mistakes I see people doing. And the mistake here is they don't really understand the dynamics of internal and external liquidity. So to reverse engineer the mistake, we have to take a look at what happened before. We have price taking out a higher time frame external liquidity pool. So what price most likely will do, irregardless if we are bullish or bearish, it will seek some internal liquidity to then either continue being bullish or to resume the bearish order flow and run for the most recent low. Meaning, most of times what you guys think the change in order flow is in reality a stop run of an internal low, and then we see a continuation and we remain bearish. The question is now, how can we make probabilities lower to get trapped in such setups? And there are two things which you always want to watch out for. First of all, you want to determine where the price initially sell off into that external liquidity, meaning which key level the price referred to expand into that final liquidity pool, which is an external old low in this case. And in this example, we have this fair value gap, which price retraced into and then dropped lower. And before it dropped lower, we have engineered this internal high. So if price is now retracing from this low up into this high, it obviously has to violate those lower time frame bearish PD areas we have in this last leg down here. Otherwise, it can't reach that internal liquidity pool, this lower time frame buy side. Meaning, you don't want to long once price is running above an internal weak high, as long as price is still respecting that key level which price initially sold off from. Meaning the much more high probability change in order flow is to wait for price to run above this weak high and then to also invert this key level, which usually is a fair value gap, and then you have a much more high probability change in order flow. Now again, we go through the definition of bullish order flow. We want to see price to disrespect bearish PD areas. We have disrespected those lower time frame bearish PD areas. And now we also inverted this fair value gap, which we previously used to sell off from, and price found resistance in that key level, meaning we have now inverted the change in order flow level. So this fair value gap, which price used to refer to previously as resistance, becomes now your change in order flow level, right? So we call this the change in order flow level, all right? Now, another thing which you want to see is price to form bullish PD areas, meaning you ask yourself, has price formed bullish PD areas in this leg up? So, for example, do we have fair value gap forming here on the buy side, which would then turn this inversion fair value gap into a BPR? Because we have a bullish fair value gap overlapping with a formerly bearish one, which is one of the strongest indications of a change in order flow. So if all of those three criteria are met, we have inverted the change in order flow level, we have formed bullish PD areas on the way up, we have a high probability change in order flow. And then we want to see price to retrace into this BPR in this case, if we have here a bullish value gap formed on the buy side as well. And then that's where you want to see price to use that level to expand higher from. And if you view this from a lens of a market maker buy model, this would be the low risk buy. Now, if price, that's the last definition of bullish order flow, indeed is not using this key level, the bullish one, to expand higher, then we have a bullish order flow since all three criteria of bullish order flow are met, all right? Now, what is the other option? I'd say price is running above this high, but as shown initially, we can close above the change in order flow level. Instead, price runs the stops above this high here, comes back one more time, and then runs this initial sweep. That is what we call then the double sweep. And that's also why you see me guys oftentimes, if I show you the trade breakdown, that a double sweep is incorporated, because oftentimes high probability setup forms after this double sweep, because early longs get flushed out and people shorting into that new low get also stopped out once price is then reversing. Meaning if price is doing that, and we now have formed here a strong high, which took out this initial weak high, and then price is coming back, that's an even more high probability change in order flow, Why? Because now price also inverted this fair value gap, but at the same time, we also closed above this strong high. And you have to ask yourself, if price is truly bearish, it would not run above this high again, since it already swept those sell stops to then run lower. So if we sweep this low, we double sweep it and then come back, then that's an even more high probability confirmation. And again, we want to see the same things to happen. Ideally, you form bullish PD areas here on this leg up. We invert. Again, we now formed more price action data in this last leg. For example, we have here fair value gap, which we invert on that second move up higher. Then you can also put your eyes already on PD arrays formed in this leg here. Right? You also want to watch this one here, but you can be more aggressive here if price double sweeps a weak high into the key level or this external low and then runs up higher. And if you have the same criteria, we form bullish PD arrays in this leg up higher here. We invert the ones on the sell side. And then we also get a candle closure above the strong high. Then that's a really high probability change in order flow, which you can use as your trade entry confirmation. And then you can use the next candles, open, high, low, close. So meaning, let's say we have an M15 high here, price closes above on the M15. You wait for the next candle, the next M15 candle to open up. And once you wick below the open, use the open, low, high, close to align yourself with the order flow. You enter, put your stop at the recent strong low, and then aim for the higher time frame target, which you have determined in your bias. And that is pretty much all you have to watch out for. You have to look at the PD arrays, which initiated that final move into the sell side, and then once price coming back to that same key level, the change in order flow level, you then want to watch for price to be able to invert this, look for the other criteria of bullish, or if it's a bearish scenario, order flow, and then you have determined a proper change in order flow. Now to illustrate this, I will show you one example of where I applied this in one of my recent trades. Alright, so we got Euro USD here, which was one of the last recent trades which I've taken using a lower time frame change in order flow. We're gonna skip now the bias and the narrative for the sake of simplicity. The plan was with the Discord to look for buys below those equal lows and then look for an expansion to the upside. So we now apply what I mentioned. We first of all have to identify what is the change in order flow level, meaning which PD array did price use to give that last recent leg to the downside. Now in this case, we have this bearish OB, which price used to then drop into that low. We also have this imbalance here, which you can note as well. You can see price use this imbalance to then form the bearish OB to then drop lower. But the predominant PD array in this case is definitely the bearish OB. And that is also the PD array which I then used to define my change in order flow. Meaning we now want to see price to be able to close above, and then we can look for an entry, right? If price is coming back up higher here, but can close above, for example, we sweep a lower time frame high, which we have engineered inside this last leg here, then we have to wait, right? So we need to see price to close above this up close candle, the candle body closure, and then we can enter on the next candle's open, low, high, close. So see now price retracing into this key level, and now we want to see price to be able to close above, right? So we closed above here, candle body closure above. You can see we still have this imbalance here, but in that context, this closure above this key level should be enough to have change in order flow. But now again, what are the three criteria of bullish order flow? We want to see price to inverse the bearish PD arrays, which we did right here. We now have a breaker. We want to see price forming new bullish ones and then respecting also the new bullish ones. Meaning we have now formed a bullish OB, disrespected this bearish one. So we have the first 2 points being checked off. And now we want to see price to also respect, for example, if we form now a bullish value gap, this bullish imbalance, right? So we can enter now here inside the imbalance, or already using this candles, open low, high, close, enter, stop at the strong low, and then we can aim for an expansion to the upside. TP1 would be this external, and then we also, in this case, want to see a continuation beyond. You can see price is retracing. We had here a bit of choppy price action on that day. You can see we went all the way to this lower bullish imbalance, this minor one. Then price displaced higher. Again, formed a new bullish PD area, this proportion block, fair value gap. We now also closed above this inversion fair value gap, which price previously used here to sell off. So now that's where you want to see price to not close back below, right? So you can move your stops now below this low, since you don't want to see price anymore to now come back below this inversion fair value gap. Otherwise, we again would not be anymore in bullish order flow after price sweeping this external high. Internal low swept, and then we see into the daily close, price again continuing the bullish expansion to the upside. And that is pretty much it for today's video, guys. I hope you could learn something. If you want to join SCN, then the signups are live for a few more days for the month of November. Leave a like and a comment down below. Let me know what you guys want to see in the upcoming videos. And that being said, see you guys in the next video.